Welcome to Trader TV, talking with IHS Markit about the impact of operational risk on primary market trading. I'm Dan Barnes, and with me is IHS Markit's Herb Werth. In our previous videos, we reviewed some of the applications that IHS Markit provides to help manage new issue workflow. Herb, those applications seem pretty comprehensive. Are your customers asking for more?
Well, our customers are always asking for more, and that's a good thing. Probably the most common request that we get is to take what we have integrated into the systems and processes that they have today.
That's great, thank you. And why is technology integration such an issue in the primary market process, and what are the benefits it brings?
Yeah, well, remember, what we're trying to do is increase efficiency and reduce operational risk, right? Mm-hmm. And by taking the platform that we have and integrating it into the systems that the customer already has, we eliminate things like rekeying of information, and we make the process more efficient because information just flows between the systems that are necessary to place orders and clear trades.
Understood. And are there different ways of integrating?
There are, and it really depends on what that client is trying to accomplish. And so, for example, if a client has an existing workflow for secondary market trading, they may want to have a primary market workflow that is similar to that, right? So we understand that, and then we look at ways that we can plug into that workflow and into the systems that they have in order to accomplish the goals the client has.
Why would clients have different ways that they need to integrate, and how do you accommodate that?
That's a great question. So clients today have existing workflows for secondary market trading, and they're looking to leverage that for primary market trading. Okay. And so that means that they have an outsourced OMS perhaps, they may have an EMS, they may have a risk system or compliance engine, and we need to figure out what's the best way to plug into that. There's a few ways that we can do it. Okay. Right? So if a client has a very simple requirement to just take the trades that come out of the primary markets workflow and book them into their trading system, right, we can provide that through either a trade export or a drop copy that can then be processed downstream. If their OMS is more sophisticated, it can handle the primary markets workflow, and they want their portfolio managers to place orders in the OMS, their traders to aggregate those orders and simply interact electronically with the market. We have the ability to provide the information to the OMS to create the security, and then we can take those orders electronically, pass them through our investor access platform, and pass their allocations back. Often, though, what we hear is clients want the best of both worlds.
Of course.
Right? So their portfolio managers and their analysts and their compliance people are very familiar with their OMS. They'd like to get the information into the OMS, create their order, perhaps check compliance pre-trade, do any kind of pre-trade modeling that they would do, and then send those orders to the trading desk. The trader has a challenge in that they need to aggregate those orders, understand the firm's demand, right? Pass that information to syndicate and get it back. And so our primary indication management module can serve as the trader's workstation in that case, but still integrate with the OMS. And at the end of the day, when those trades are complete, pass those trades back to be booked. And so we essentially have three different options based on the appetite of the client and the technical capabilities of their infrastructure.
That's very good. So basically they can be comfortable across the organization and at every level.
That's the goal.
And does this have to happen in a big bang project, or can this happen in phases?
You can always do it in phases, and that's actually a really important point, because I think sometimes the perfect solution, or what people envision as the perfect solution, is discounted by the amount of time it might take to implement that. And so taking a phased approach gives you the advantage of being able to add that efficiency and reduce that risk, at least at a first step, and build towards the longer goal of full highly integrated systems.
And what's specifically the role of vendors in helping firms in that process?
Well, vendors like to integrate. Right. And so making it as simple as possible for the ultimate client is always our goal, but also making it supportable. Right? And so vendors will tend to push back if something seems to deviate from a standard solution, usually because they are concerned about the supportability of that. And so I would say for customers to be mindful of that and understand both the need to integrate the workflow that they're trying to achieve and then the long-term supportability of the solution. Vendors are always thinking that way. Sometimes it's a matter of aligning the needs of the vendors that are integrating along with the client and coming up with something that everybody's comfortable with.
So Herb, in our series of 3 videos, we've talked about the issuance process, we've talked about the way your applications can reduce operational risk for traders and portfolio managers. We've also talked about the importance of integration. Those videos are available on tradertv.net, but if somebody wants to know more information, what should they do?
Well, I'd encourage anyone that's interested in more information to reach out to us. The best way to get in touch with us is to email us at buyside@ihsmarkit.com, and we'd be happy to follow up.
That's great. Herb, thank you so much.
Thank you, Dan.